Welcome everyone. In this session, we are going to learn about a candlestick pattern known as bearish engulfing pattern. What is bearish engulfing pattern? What is the psychology behind this pattern and how we trade bearish engulfing pattern? We will be looking into this in this session. So, first of all, let's understand what is bearish engulfing pattern. Whenever a market is in uptrend, just a second. Whenever a market is in uptrend and at the top a small green candle forms, and this small green candle gets engulfed by a large red candle, then it is called a bearish engulfing pattern. So as you can see in the picture here, it was a clear uptrend and at the top a small green candle formed, and this green candle is completely engulfed by this red candle. So we can say that this is a bearish engulfing pattern. Now, what is the psychology behind this pattern and how the psychology works here is, let's see. What we can see here is market was going in a continuous uptrend, and then what happened, a small green candle formed, and just immediately after that the market feigned to move upside. Market feigned to move upside, and finally what happened is a big red candle is being formed just after that small green candle, and that green candle is being completely engulfed by the red candle. So the psychology behind this is that market failed to move upside and the bulls became weak in this candle and the bears became dominant in the just immediate next candle, and thus a bearish engulfing pattern is being formed. And now let's see into the chart how it looks in the chart and how we trade. Let's see. Here is the chart of Nifty 50 index 15 minutes time frame. As you can see, in the whole previous day, market was bullish, trend was up, but finally what happened, a red candle was formed here, and just after that a small green candle is formed. A small green candle as compared to previous red or previous candle, and this green candle is completely engulfed by the immediate red candle, which means those bulls who were dominating the market here got weakened here, and now bears overpowered them. So now I hope you might have understood the psychology behind the pattern. Now how we trade this pattern is, what we do whenever we spot bullish engulfing pattern in a previous uptrending market, we just enter at the closing or the low of the candle, keeping high of the candle as the stop loss, and as per our risk management rule, minimum risk reward ratio is 1:1.5. So if this much is our risk, 1.5 times will be our reward. So this would be our target, and as you can see somewhere over here in this candle our target would have been achieved. So this is how we trade bullish engulfing pattern. This was the psychology behind the bullish engulfing pattern, and this was our entry, this was our stop loss, and this point would have been our exit. This is how we determine our entry exit level, stop loss, and we plan according to the psychology and trade accordingly. This is how we trade bearish engulfing pattern. Let's see, move on to our next chart. Here is the example of Nifty 15 minutes time frame. Again, as you can see, previously market was in an uptrend, bullishness was there, and then what happened, a small green candle formed which was completely engulfed by the immediate red candle. So this is what bearish engulfing pattern is. This is what bearish engulfing pattern is. So now, according to our plan and strategy, what we have to do is we just have to enter at the low or closing of the candle, keeping our stop loss at the high of the candle and our target of minimum 1.5. So if this is 1, this is 1 is to 1.5. So somewhere here in this candle our target would have been achieved. So this was all about bearish engulfing pattern. So what was the psychology? I will repeat once again. Bulls were overpowering the market, and after certain times bulls became weak, bears became dominant, and the market trend changed. And this is what we have to do. This is how we have to exploit the opportunity of tug between bulls and bear. So this is how you have to trade and plan your stop losses accordingly. Let's see some more examples. Here you can see market was in a small uptrend. Market was in a small uptrend. It's a Bandhan Bank 15 minutes time frame and is listed. Then what happened? A green bullish candle formed at the top, and this bullish candle was completely engulfed by the red bearish candle. So this is our bearish engulfing pattern. So now what our strategy says, we have to enter at the low or close of the candle somewhere here, keeping our stop loss at the high somewhere here. If this much is our risk, our reward should be 1.5 times of our risk, somewhat here 1.5 times. So you might have achieved your target in this candle. So this is how you have to trade. This is how bearish engulfing pattern works. This is how you have to plan your entry, exit, and your stop loss. So what are the main three criterias behind this strategy? Are, again, there are three golden rules for this strategy. Without these three golden rules, we are not going to trade in bearish engulfing pattern. What are those three golden rules? First golden rule is market should be in uptrend. Market should be in uptrend previously. Second, green bullish candle at top of the uptrend. And the third, red bearish candle which completely engulfs the previous green candle. So these are the three golden rules for trading using bearish engulfing pattern. So we have to follow this rule. If these three rules does, if any of these three rules, if any of these three rules are not getting followed, then we will not be trading for bearish engulfing pattern. Suppose if the market is traveling like this and a green candle forms here and then again a red candle, so should we apply our bearish engulfing strategy? No, we will not apply, because our first criteria is previous uptrend. Second, suppose market is moving in this manner. What happens? A slight correction comes and then a green candle forms somewhere here and it is being engulfed by a red candle. So should we apply our bearish engulfing strategy? No. Why? Because green bullish candle should be at the top of uptrend, somewhere here or somewhere after a small consolidation here, but not like this, not here. It will not work. And third is red bearish candle. Just a second, let me clear the clutters so that it will be easier for you to understand. Yeah, red bearish candle. Again, see, let's see, this is the red candle, bearish candle, and this is a green candle. It's blue, but let's consider it as a green. So what's happening here is, as you can clearly see, the body of the candle is being completely engulfed by this bearish candle, but wicks are not engulfed. So should we apply our bearish engulfing pattern strategy here? No, we will not, until and unless whole candle is being engulfed. Until and unless whole candle is being engulfed like this, we will not going to apply bearish engulfing strategy. So what we have to understand here is, complete previous candle should be engulfed by the engulfing candle, then only we will be applying our engulfing strategy. Let's look some more examples. Jindal Steel and Power Limited 15 minutes. As you can see, market is in an uptrend. What happens? Green candle forms at the top of the trend, which was completely engulfed by the red bearish candle. So what our strategy says? Our strategy says we have to enter here, keeping our stop loss somewhere here. If this much is our risk, our reward should be 1.5 times of this, somewhere here. So this is our bearish engulfing trading strategy. Your target would have been achieved somewhere here. This is how you have to trade bearish engulfing patterns. This is the strategy for that pattern, and this is how you have to plan your stop loss, entry, exit, and targets. Let's see one more example. Euro USD dollar 15 minutes time frame. Market was in uptrend. It fell slightly, again moved up, and then it fell. Finally, what happened is a small red candle is being formed, which is engulfed by a big red candle. So, should we consider this as a bearish engulfing pattern? What to do? Should we trade using bearish engulfing strategy? Because our rule says green candle at the top engulfed by the red candle. So what to do? Should we trade here, keeping our entry here, stop loss here, and our target somewhere here? As per our rule, we will not going to trade. We will not going to trade. We have to stick with our plan. We have to stick with our strategies. We have to stick with our rules. Wherever market might go, we don't care. We don't care whether market falls from here till here. We don't have to care for that, because market is not going anywhere, but we have to stick with our plan and our strategy. I have included this example for your clarity purpose. This is not our trade. We will not be trading in this pattern using bearish engulfing, but just for the sake of clarity, because this type of scenario may develop in live market, so most of the people will get confused and they might enter somewhere here, and at the end they might lose because market may turn around from there, because there is very less chance that market will fall like this after showing this type of wrong pattern. So we will not be trading bearish engulfing pattern using this strategy. So I hope you might have understood everything about the bearish engulfing pattern and psychology behind it and how we trade. Let's see one more example. NMDC Limited India 15 minutes time frame. Clear uptrend followed by a green candle at the top, which was completely engulfed by a red bearish candle, which means bulls became weak, bears became dominant. So what our strategy says: entry at the low, stop loss at the high, target 1.5 times of our risk somewhere here. So this would have been our target, and our target would have been achieved in this candle. So this is all about bearish engulfing pattern, how we have to trade, how we have to plan our entry, exit, stop losses, target, and what are the psychology behind this pattern and how market reacts to this psychology. So I have made it everything clear with good number of examples. I hope you might have understood each and every thing about the bearish engulfing pattern, when we have to trade bearish engulfing pattern, how we have to trade bearish engulfing pattern, what are the golden rules for trading bearish engulfing pattern. So this was all about the bearish engulfing pattern in this session. We will be looking into our another pattern in the next session. So till then, do lot of back test, practice, remember the golden rule, stay disciplined, have patience, and all the best for your trading career. See you soon in the next session.